Nigeria must diversify her economy to survive oil price crash. President Buhari stresses we won't devalue the naira, says the Central Bank of Nigeria, and federal government wars Swedish government over broadband infrastructure deployment. Plus, Nigeria exported 68.2 billion naira agri-produce in 3 months. This is Business Express, reaching you from Abuja, Nigeria's capital, on the network service of the Nigerian Television Authority. I am Amina Nujain. A warm welcome. The Central Bank of Nigeria says it has enough foreign exchange reserves to maintain the current value of the naira. The Apex Bank, in a statement, says it has set security agencies on the track of currency speculators who are causing panic in the market. Similarly, the dollar stood tall on Friday as investors scrambled for the world's most liquid currency amid deepening panic about the coronavirus, while the euro nursed losses after the European Central Bank disappointed investors by not cutting rates. Let's see how the naira is exchanging for other international currencies. The federal government has urged the Swedish government to support Nigeria's quest to deploy more robust broadband infrastructure in the country for economic growth and prosperity. Minister of Communications and Digital Economy Isa Ali Pantami said this when he met with the Swedish ambassador to Nigeria. He says government plans to move the massive capacity from landing point to hinterland and wants the Swedish government to buy into this great idea of deploying this massive broadband infrastructure, which is fiber-driven. In the meantime, the federal government says the sudden crash in crude oil price by 45% heightens the need for Nigeria to promote growth in other sectors of the economy. President Muhammadu Buhari says the development occasioned by the outbreak of coronavirus would seriously affect the ability of federal government to deliver plans, infrastructure, especially with the impact on oil revenue. And amid escalating oil price wars between Saudi Arabia and Russia, Brent crude, the international benchmark, fell to $32 per barrel after the United States banned travel from Europe to curtail the spread of coronavirus. The downturn in oil prices has been worsened by the threat of a flood of cheap supply as Saudi Arabia promised to raise output to a record high of 13 million barrels per day in a standoff with Russia. And still on the energy sector, beyond the ravaging impact of COVID-19, the usual fallout between OPEC plus coalitions further magnified the downside for the crude prices over the last few weeks. Specifically, while OPEC had recommended additional output cut of 1.5 million barrels per day in response to reduced oil demand stemming from COVID-19 virus, the main non-OPEC partner in coalition, Russia, refused to sign to a condition output cut. The fallout in negotiation resulted in a drive for market share and neglect of prevailing 1.7 million barrels per day cut, which is expected to end in March. And the federal government Wednesday allayed fears of an economic crisis in view of effects of crash in the global oil market, the coronavirus epidemic on the nation's economy. Minister of Finance, Budget and National Planning Zainab Ahmed urged Nigerians not to panic as the drastic fall in global oil prices threatens the country's 2020 budget as well as its macroeconomic stability. Governor of the Central Bank of Nigeria, Godwin Emefiele, says the CBN had already embarked on measures to significantly reduce lending rates, which has resulted in total banking credit rising to over 17.4 trillion naira as of January. He, however, said the country should plan for the possibility of a further drop in crude oil prices. And to speak on the outcome of the Federal Executive Council meeting and the effect of coronavirus on the economy, we have Dr. Isaac Ebuja. He is a public health specialist. Welcome to Business Express.
Good afternoon.
And joining us from London is Lukman Odunuga. Always a pleasure having you on the program.
Afternoon. Thank you for having me here today.
Now, the coronavirus is ravaging both the health and the economy of nations. From your perspective, what are your thoughts?
Well, let me first give an overview of where we are and what is happening. Globally, we now have 128,000 cases with death rate of 4,700 people, which gives a fatality rate of about 3.67%, which is not too bad compared to what it could be. In the US, we now have about 1,669 cases with 41 deaths. That's a 2.5% fatality rate. In the UK, we have 596 with 8 deaths, which is 1.4. Excellent case management, I would say. In South Korea, we have about 8,000 cases with 66 deaths, which is very low. And that shows that South Korea has done something marvelous. It shows that their own fatality rate is less than 1%. It's actually about 0.825%, which is excellent. Back here in Nigeria, we've had 2 cases with 0 fatality rate, which is super excellent. We've not lost anybody, and we're not likely to lose any of those 2 that are at the moment being treated. They are likely to recover, and we are praying too that we don't have more cases. But looking at the global picture of health in relation to the economies of the world, you find that there is an interrelationship between economy and health, between productivity and health, between health infrastructure and any other health. You cannot take a patient to the hospital if there is no road, no rail. You cannot treat a patient if there is no light. You cannot treat a patient if there is no water. You cannot treat a patient if there are no facilities for production of vaccines and drugs. At the moment, the health infrastructure seems to be overstretched in China. China has handled it very well. Many times I wonder if this thing had started somewhere, in some other countries with less ability to respond as China did. The impact of this is overwhelming if you want to look at it closely. For example, most of those who are easily giving in to this disease are those who already have some chronic illnesses, hypertension, diabetes, and so on, and in the elderly. Now, with the situation that we have, it means that their cases will be worse in countries like UK, US.
Let me come in here.
Okay.
We have Lukman, who is in the United Kingdom, who is joining us live via Skype. Now, looking at the effects of coronavirus in the economy, Europe is heavily under this crisis, dealing with huge numbers and renewed infected cases. Paint us a picture of what's going on there.
Thank you again for having me here, yes. So as we can see in Europe, there's over 18,000 cases of the coronavirus, and it's impacting Germany, and of course it's impacting Italy. Yesterday we had the European Central Bank meeting, and most were expecting the central bank to actually cut interest rates in an effort to support the European economy. However, the central bank disappointed and decided to, roll out different types of stimulus measures. This is going to have a knock-on effect because slowing growth in Europe would negatively impact the United States. It will come to the UK, and it will be felt across the board. So what we're seeing in Europe poses a negative risk to the global economy, and this could roll over back to Nigeria.
Now, prior to this development of the coronavirus, the World Bank and the IMF had forecasted that they were revising the world economic growth downwards. Now, with this development, how much down should we expect to see the global economy, and translating it to economies like Nigeria and Africa?
So at this point in time, it's quite difficult to quantify the human and economic cost the coronavirus will have on China, Asia, emerging markets, and the global economy. And we have to keep in mind that the coronavirus is not a trade or financial crisis. It's a health crisis that creates negative supply-side shocks. So this is why when we're seeing major central banks like the Federal Reserve, the Bank of England, the Bank of Japan, and the other central banks trying to cut interest rates to shield their respective economies, it's not working because everybody's looking at fiscal policies to come to the rescue. Right now, it looks like the global economy may be heading to a recession, but we won't have the answer until we start to see first quarter and second quarter growth, which will be released later in the month. For Nigeria, though, we can actually already see the impact. Nigeria did perform quite well in 2019. It had growth just above just around 2.3, 2.5%. But we can see that the coronavirus has actually resulted in oil prices depreciating over 45% since the start of the year. Now, everybody knows that oil is Nigeria's lifeblood, and the depreciation in oil has been so bad that it's actually forced the government to revise its 2020 budget. It's going to hit export earnings. It's going to hit government revenues. It's going to result in probably the Naira being devalued if foreign exchange reserves drop below the 30 billion threshold. And at worst case, if it results in inflation rising, this would certainly threaten Nigeria's fragile recovery in 2020.
Talking about recovery, let's turn to Dr. Isaac. You earlier spoke about how Nigeria seems to be coping very well with the situation. Now, in terms of economic loss and opportunities, what would be your thoughts?
Well, we have to try and remain positive-minded, but certainly to be aware that there are possibilities of us suffering a little bit economically. Because when productivity goes down, it affects health and health infrastructure in particular very drastically. One of the things that I'm looking forward to seeing, and I'm praying that it happens in Nigeria, is that we don't have more cases. And even if we do, that we don't lose any lives. If we happen to experience what some of these countries in Europe, for example, or America are experiencing, it will tell a lot, it will impact a lot negatively on our own economy, because we are not as strong as those economies, one. Two, the means by which people communicate, people operate, the technology with which, for example, you sit in your house and you could work to coordinate and connect with somebody in the office, does not quite exist here. And therefore, if this thing continues at the rate at which it is going to impact on our economy more negatively, and it is going to cause a lot of depression.
We are talking about the economy.
Yes.
Businesses comes to mind.
Yes.
What should businesses do health-wise?
What businesses should do is to prepare themselves and get ready for worse scenarios. That doesn't mean that they would panic, but let them also understand that things can get worse than what they are now. And let people make good and judicious use of whatever they have at the moment. People are stockpiling so that in the event of worse scenario, they will have something to use. That is only for a short term. It cannot last for too long. Businesses should also be thinking of how to diversify, how to survive, how to float, because if they are relying, for example, say, let's take marketing in Nigeria. Our markets are like Wuse Market or any other market, or Garaki Market. They are crowded. If the trend of the spread of the virus continues, there will come to a time when people will be discouraged from going to the market. And as a result, those who are doing business in those markets would have no business again, because they must have to stay at home, and they must have to distance themselves from other people. You cannot sell and buy when you are distancing yourself from somebody.
Exactly. Talking about distancing, social distancing, Lukman, the combination of the falling crude oil prices, coronavirus, and talk of reviewing the budget, looking at the realities of the benchmark, what do you see coming?
So, as we've discussed earlier, Nigeria's blessing was oil, but it was also its curse. Earlier we said that the fact that a major chunk of export earnings and government revenues come from oil, Nigeria will remain exposed by external shocks. And there's a lot of talk about diversification, moving to agriculture, and focusing on a non-oil sector. As we saw, if we look in Q4 growth, non-oil growth expanded around 2.36% in the fourth quarter due to the non-oil sector. This could be a good method for Nigeria to try to break away from the chains of oil reliance. However, though, diversification and heavy investment in infrastructure doesn't happen overnight. Earlier in the year, we had the UK-Africa Summit, where Nigeria was able to secure over 6.5 billion of deals with the UK, and this is a good step for Nigeria to try to break away from the clutches of oil reliance. But in the near term, what the government can do to try to source revenues from the non-oil sources could be through the VAT. We've already seen that VAT has been increased from 5 to 7.5%, and this could be the first step to gain revenues from non-oil sources in the short term, as Nigeria tries to diversify into agriculture and even possibly tourism when the coronavirus chaos cools down.
Now, same question, Dr. Isaac.
What's the question again?
How do you see the combination of the falling oil prices, coronavirus, and the epidemic with thoughts of reviewing the budget?
I think the budget would necessarily be reviewed. When the budget was made, it was predicated on about $57 per barrel. Now it has nosedived to less than 30. And there's no way you would expect that what was planned to be done with that money would now be able to will be accomplished. It doesn't look likely. And the earlier, I'm glad the Federal Executive Council has already started thinking about this ahead of time. The earlier we think of the alternatives and how we will react further, the better for us. And this brings us to why we must necessarily diversify, and especially in relation to technology. This is very key.
Okay. I would like to thank my guest, Dr. Isaac Egboja. He is a public health specialist, and Lukman Odenuga from London, who is an analyst. Thank you so much for your time.
Thank you. Always a pleasure.
And moving on, gold prices fell further on Friday and were on track to post their biggest weekly drop in nearly 7 years as a rout in global equities forced investors to cover margin calls. The Nigerian Stock Exchange closed Friday with the all-share index gaining 0.17%. The all-share index 22,734.07 points. The top trades were Guarantee Trust Bank, Zenith Bank, and FBN Holdings. And looking at global stocks, Kenya was forced to shut down, falling by 10%, reacting to global trends in the equities market. And stocks in Asia Pacific saw heavy losses in Friday's trade after shares of Wall Street saw a historic drop overnight as fears over the global coronavirus outbreak continued to weigh on investor sentiments. Over now to Bosede Abel.
The fallout of the impact of coronavirus continues to affect global stocks as they continue to depreciate. Asia stocks traded mostly negative on Friday, 13th March, after shares of Wall Street saw a historic drop overnight, as fears over the virus outbreak continues to weigh on investor sentiment. Nikkei fell 6.08% to close at 17,431.05 after earlier plunging 10% during the session. Hang Seng Index declined 1.14% and Shanghai Composite also down 1.23% to 2,887.43. U.S. stock futures were unstable in early trading of Friday after the major averages on Thursday suffered their worst session since the Black Monday market crashed in 1987. European stocks attempted to rally in early trade after their worst sell-off in history as the rapid spread of the virus continues to dominate investor sentiment. Africa's equities were also mostly in the red. Nairobi's all-share, Tunisia's Tunidex, Namibia's overall index, and Ghana's GSE composites were negative, while South Africa's JSE Africa Top 40 rose by 0.20%.
Global Market Report wraps up this edition of Business Express. Don't forget, you can access all previous episodes on YouTube, and you can also communicate with us on Twitter, and handle is @NTA News Now, #IsBizX. We value your feedback. Join us again next week for another package. I am Amina Nujaim. Have a great weekend.